Hi, I met with an agent over the weekend who had a client who was concerned about the viability of buying an investment property in today's interest rate environment. So I put this together and we had a great meeting. And I can customize this for you if you like, if you find it interesting or helpful. I hope you do. In this scenario, we have, first we have the fact that 1 in 6 purchases are investment properties. So we have to be conscious of that and realize that we have to perhaps focus on that a little bit more. That's what my goal is here with you. This property, this hypothetical property, has a $600,000 purchase price. It's a single family home. It requires a 25% down payment. It has a $450,000 loan amount after that 25% down payment. We're going in at 7.25% on a 30-year fixed loan because in this environment, the seller will pay 2% discount to buy the rate down. That's a permanent buy down. That's not a 2-1 buy down. We're not talking about that this week. Now, there will be about $10,000 remaining for the buyer to pay in closing costs. The monthly payment is going to be about $35.50 with taxes and insurance included. Estimating a $250 a month monthly repair estimate, a 3% yearly property tax increase over the first 10 years, 5% annual appreciation, about $3,500 monthly rent in the first year, 8% year-over-year rental increase, a 4% vacancy rate. This is a 10-year plan, and it just discusses the nuts and bolts of the income and appreciation. I'm not even talking about the massive income tax advantages when you own rental properties. Cash flow year one, $3,500 rent in, $3,550 mortgage payment out every month. Also the $250 repair cost. You're down about $300 a month or $3,600 for year one, $3,600 loss year one. A big deal, right? Let's see here. Rent projections, that's the 8% increase year over year. That really compounds kind of ridiculously. Gross rent over the first 10 years are about $607,140. Profit and equity on this, $607,140 rent, $426,000 in debt service, $30,000 in repair, about $7,000 in increased property taxes, $24,285 to the 4% vacancy. Net income from rent about $119,833. I don't want to get too deep into the pennies on this, but you're at about $119, $120. 5% appreciation per year over the first 10 years takes us from $600 to about $910,793. Profit and equity total $430,626 at the end of that first 10 years. Now, you had an original investment of $160. So profit and equity minus the $160, the down payment plus the closing cost that you paid, you're netting about $270,626. Now, that's profit if you never refinanced out of 7.25%. Okay? Two things. First is if you use a property management company, we're going to back this profit down by about $60,000 because it's a 10% of the rent hit to have a property management company manage a property for you, reduces your profit to $210,000. Okay. What if you refinanced? Let's say 5 years into this, or for half the time that you had the mortgage in the first 10 years, you cut the rate down to about 5%. So if we refinance from the 7.25 down to 5%, this is an amortization schedule. At the end of year 5, you're at $424,704 as a mortgage balance. Okay. We're refinancing. The $424,704 balance, we're adding in $7,500 in closing costs. $432 is the new mortgage balance. So if January 2028, you go down to 5% on that, projecting where the taxes and insurance will be there, the mortgage payment still drops to about $3,000. So you're saving $500 a month for half of the 10 years. Saving $500 a month times 12 months times 5 years is about $30,000 you're increasing to the bottom line. So if you're not using a property management company down here at the bottom right, you're making about $293, $126. If you sell at the end of the 10 years, you're making about $233 if you've been using a property management company. So it's a fantastic proposition. Why now? Well, the cost of waiting is why now. Right now, you can negotiate terms on a property. You can buy something under market. You can wait for better rates. But if you wait for better rates, you're going to be bidding over the asking price. You're not going to be getting the properties that you might be able to get right now at the levels you'll be able to get them. You'll maybe be waiving inspections, not knowing exactly what you're getting, rolling the dice a little bit more than you could be right now. Also, a lot of people right now can't buy. A lot of people are kind of pushed out of the market, first-time buyers and whatnot. But they're making good money, making 9% more than they were last year. They can't buy, but they will rent. And as Warren Buffett said, be greedy when others are fearful. I'll send this out to you. I'd love to talk about it with you. Maybe customize it more to different price points or whatever you might think. Thank you so much. I will see you next week.